Welcome out to today's advisory report. It is July 13th, 2026. As you can see, all of our gauges are green. The market condition is favorable. The intermediate trend, the short-term trend are both bullish, and we are playing offense in our strategies. We had nice movement in the market on Friday, moving out of a short-term consolidation. That got pushed back down into the consolidation. Today, just kind of chopping around, but we are in an uptrend, so we're going to stay biased to the upside. Our thought process is that when we are bullish, we are looking to target outperformance to the upside on the days where the market actually goes up. We're thinking there's more up days than down days when the market is bullish, and so we will probably outpace to the downside, meaning we might lose a little bit more on those rare or few days that the market is down compared to the days that it actually goes up. And then the opposite kind of happens in a bearish market. So we're positioning for defense, which means those few days that go up when we are bearish, we will probably underperform to the upside, but we won't lose as much to the downside. And we're thinking there's going to be more down days than up days when we're bearish. So right now we're bullish. Today is one of those days that we're down, and our strategy, since they are offensive right now, did a little worse than the down day that we had. So let's go ahead and look at the short-term trend, and you can see here's that Friday push up and out, and here's that today push back in. So just still kind of chopping around, but we are making higher lows. 1, 2, 3. We are above the 20-day. We're above the 50-day. So we'll have to see if there's another retest and then a loop back up, or maybe the market retests and break down, which means we'll trigger a little bit of defense, or we could just kind of chop around a little bit more. So let's go ahead and look at today really quick. You can just kind of see today down here on the 5-minute chart. We opened up on a gap down, and then it was pretty much selling all day long. Not aggressive selling, but selling enough for the SP500 to be down 0.79%. And so, like I said, our strategies that are comparing themselves, which are the ultra aggressive and the aggressive, to the SP500 did a little worse than that. And that kind of filtered through to the other strategies depending on how aggressive they actually are. Let's go ahead and jump on over to Market Lens, and let's look at a couple of the positions that we have in the ultra aggressive account. We'll start out with the double Dell. Looks decent today, even though down 3.72%. You can see we came down further than that, tested the 20-day, bounced back up. And let's see if that was the short-term bottom as a couple days pull back, and see if this wants to turn back up and go higher. Let's go ahead and look at what I would say kind of disappointing small caps, since we made our purchase right around this area, now kind of turning back down. We'll see if that catches a bid and turns back up. Eli Lilly down now several days in a row, still higher than where we got into this, but finding some support on the 20-day, and we'll see what this one actually wants to do. A trip down on the 50-day wouldn't be good, so we'd be out far before that. CrowdStrike actually positive on the day after starting out negative, and a nice hammer candle after undercutting the 20-day. We'll see if this one's ready to turn up. And Goldman Sachs in the financials just acting a little weak in my opinion compared to the financial ETF XLF, which was up for the day. And you can see this looks a lot different than Goldman Sachs. So maybe considering some different positioning in this one. That's what I got for you today. Take care. Have a wonderful afternoon.